Mr. A.V. Rajwade joins in on the show then. Mr. Rajwade, clearly nothing from the RBI seems to be helping the currency.
Well, as I think I have on your own channel, I think I've been arguing for a very long time that the problems are fundamental, that they are not technical or speculation caused, that the only thing that could stop the rupee at the current level would be if the RBI intervenes directly in the market by selling dollars from the reserves. But then they have their own problems with that because the reserves in relation to our net external liabilities are not very high. The quality of our reserves is very poor. It's all borrowed money. And then the question is, how much of the borrowed money do you commit to maintain a particular level? So I think this was to be expected, that the liquidity tightening alone is not going to be enough. And I also believe that the 60 or now whatever 61 level is not a level where our trade deficit is going to come down significantly, given the inflation differentials over the last decade.
Mr. Rajwade, do you think the current leg of decline in rupee is slightly more alarming? Because the current leg of decline in Indian rupee is not coming in line with crack in other emerging market currencies, and it is coming after Reserve Bank of India has already intervened twice?
Yes and no. No, because I personally do not believe that the level of the rupee, except for the bank trader, and I'm not a trader, I look at things from a longer term, medium term kind of perspective, from fundamentals. From their angle, what Mr. Bernanke says or what happens to the dollar index become very important issues in terms of taking their trading positions in the market. But I do not think that sort of influences the medium term very significantly. I think there is one other point. There is a very major difference between what's happening, the macro fundamentals of the other Asian economies and India. All of them, practically all of them, have surpluses on the current account. We have a huge, yawning deficit of almost $100 billion. So I think the two situations are not really comparable. Yes, for a trader, it probably makes some sense to look at that. But for somebody looking at what is likely to happen over the medium term, I don't think that matters. It will be, the fate of the rupee will be decided by what happens to the domestic economy, domestic inflation, and restoration of competitiveness of the tradable sectors.